Hello and welcome to another episode of the Crypto Club and Digital Assets Weekly Catch-up on Zoom. It is Sunday, the 11th of August 2024, and we never know quite what we're going to be talking about. It really depends upon who the audience is and what they want to discuss. So if you're interested in crypto or new to crypto, do come along and join us. A future session, there's a link in the comments below. Or if you're someone who's got more experience and likes to share your knowledge and your expertise, do come along and join us. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time. We run them via Zoom, we record them, we put them up on YouTube for people to watch afterwards. So if you're watching this on YouTube, do click on like, subscribe, make comments. But as I said before, do come and join. Topics vary. We often talk about blockchain developments on layer 1 and layer 2, DeFi, NFTs, ICOs, the metaverse, central bank digital currencies, digital asset tokenization, lots of other things to cover up. So with that, let's see who's going to come and join us today.
Hello.
Hey, thought I couldn't hear you for a moment. Hey, Laurie, how are you?
I'm doing great. I'm in Hong Kong.
Okay. How are you today then?
Today is Sunday. Just relax.
What brings you along today then? You interested in crypto?
Yeah, I'm interested in digital asset and blockchain, and would like to know more about the upcoming. The breakthrough. So what is this Zoom meeting about?
What is this meeting about? Is that what you mean? What is this meeting about?
Yeah. What is this Zoom about?
Oh, right. Okay, cool. So we hold these sessions every week, every Sunday evening at the same time. They're open to everybody. And we talk about whatever people who come along want to talk about. So if you're a novice and just beginning in the crypto space, we can talk about beginner things. If you're interested more in more technical things and different types of blockchains, we talk about that. If you're into NFTs or the metaverse, we sometimes talk about that. So it really depends upon what people's levels are of experience and knowledge and what they want out of it. So are you looking to achieve anything in particular by joining today? Or are you just here to listen and learn?
I just have some basic concept of blockchain and Bitcoin, so I would know more about, the crypto and every stuff.
Okay. So have you been interested in crypto for a while then, or is it fairly new for you still?
I think around 1 year.
And have you been able to set up your own wallet and buy some crypto or trade some crypto at any point?
Maybe.
Maybe. I guess everyone's at different levels of the journey. So I've been interested in this space for about 8 or so years, I think, and just find it fascinating, all the developments. So I've bought and sold some cryptos, I've traded some. I just find it really interesting. Still quite difficult to get into. I don't know how you found it so far, but setting up a wallet, linking to an exchange, but buying some crypto and that. But how are you finding things generally in Hong Kong? What's the kind of appetite around crypto now there?
I think there are many people they are interested in crypto, and because China banned Web3 and crypto, so many mainland Chinese they will come to Hong Kong to invest in cryptocurrency.
Yeah, and I think I've seen or heard similar stories that on the mainland, I don't think crypto isn't banned, is it? I just thought it wasn't encouraged because a lot of crypto mining still happens in China, if I remember correctly.
Yeah, it's officially banned. I don't know how they do it underground.
Okay.
Under the table.
So is there anything you're looking to learn or to share today?
Just know more about the update and know more about Bitcoin, Ethereum, and the trend and the tech lead and the knowledge.
Okay, yeah. Well, it certainly, I mean, straight away there, you've shown some knowledge that two of the leading cryptocurrencies are Bitcoin and Ethereum. As you say, there's lots of others. There's like thousands these days, which have been developed either as spin-offs from Bitcoin and Ethereum, or they've created their own cryptocurrencies, or they have done tokenization. So Ethereum is very popular with that, with what are known as ERC20 tokens that allow people with smart contracts to create their own kind of platforms and that. So it's an interesting area. But did you take an interest in like crypto prices, that kind of thing then?
Yes.
So the whole crypto market's really interesting at the moment. Prices have been going up and down. Bitcoin in particular, I think it's around about $60,000 mark at the moment, which means it had dropped down to, I think it dropped just below 50,000 last week. So it's risen another, well, it dropped and then recovered by about 20%. So it'd be interesting to see where it goes next. And we're joined as well by JT. Hey, JT, staying cool.
Hey, hello everyone.
So we've got Laurie, who's connecting in from Hong Kong. We've got MB, who can hear us, but I can't hear any kind of response. And JT, I guess, are you in the UK at the moment?
Yeah, in London.
So just trying to find out if there's anyone in particular who's got any news or anything they'd like to talk about today. Just thought we'd come together. So certainly the Bitcoin price moves lately have been catching people out quite a lot, I think. With it's been fairly volatile, but for those of us who've been in this space for a few years, it's nothing that's that dramatic.
Yeah, I mean, it's always the case, isn't it? And the number of liquidations was just insane. Yeah, but
I guess was that because there were a lot of like stop losses in place this time for that kind of thing?
no, just people leveraging, you know, and they just get liquidated. That's as simple as that. You know?
Right. Do you think there's much of a difference with the Bitcoin ETFs kicking in now? Do you think that's adding some stability or it's making it worse?
It was all priced in, to be frank, you know, and a lot of people just got to put money on it. But I think the whole thing was, you know, all that movement down. I know because you can very clearly see what happened. Yeah, it was because the Japanese decided to start to charge interest rates. Yeah.
Right, yeah, and this is where we've got the whole thing of the Japanese. Well, they increased their interest rate by 0.25% or something.
They were not charging interest rates anything for loans. So people, what was happening in international markets, anybody needed liquidity, just went there, got loans at 0%, yeah, and then of course spend it, pump Bitcoin, buy stocks, whatever, you know, they wanted to do. That's what they've been doing for years.
Okay.
I mean, if you can get a loan and not pay any interest rates, then obviously it's quite good, isn't it? So they and then when they announced all of those people that had positions, yeah, they had borrowed the money at zero, but now they have to start to pay. They start all to sell and pay back so that they don't pay any interest. Yeah, so it was super interesting to see that. But and again. You can see the bots started to buy back again. This is all about FA, you know. If it makes sense, they'll dump. If it doesn't, these are very, very large hedge funds that can get very quickly, very, very quickly, and of course high frequency trading as well at the HFT. Yeah, so they have access to large, enormous amounts of liquidity. So you see what happens straight away. All of those green candles, you know, and that generated up, you know, we went up to 60K. So, you know, obviously that generated another 300 million of liquidation. So they killed, I think it was $1.2 billion in liquidations when they started to sell, you know, and then generated another 300 million when they start to, because everybody was talking, oh, it's going to go to 45, 49K. And a lot of people start to put their positions, short positions. And guess what they've done? You know,
it recovered.
They put some longs and they start to buy again. You know, it's a game. I feel that the market is being manipulated. So people, very large liquidity, access to very large liquidity.
I agree. I think there are a few players in there who have an influence. So MB's left and rejoined. MB, can we hear you now? But yeah, JT, I agree with you that it's quite entertaining watching the markets going through these kind of like rises and drops and everyone predicting what's going to happen next and most people getting it wrong. But then that's normal. That's the same with traditional share trading and that as well. That if everyone got it right, then there'd be no money to be made and there'd be stability. Laurie, I don't know, do you actively get involved in buying and selling crypto at all, or do you just watch what's happening in the markets now? Oh, MB's
at the moment, it's still watching.
Are you involved in any local groups or anything in Hong Kong who are into crypto?
A few, but they are not professional.
Yeah, I guess there's a lot of amateurs out there. That's fair enough. Hey, MB, we could almost hear you then. I'm just keen to actually hear from them as well, see where they're from and that. Yeah, sorry, Laurie. I think it's no different that in many countries there's a lot of amateur groups who get together, whether they're trading groups or interest groups. The professional ones, it's kind of interesting. The ones that you pay to join quite often are not worth investing in, shall we say. It depends from group to group. But I've seen a lot of groups where you end up paying, whether it's you're on Discord or Patreon or something, and some of them seem to do quite well, and others that they're just guessing as much as everyone else. I can't really offer any recommendations or anything. So JT, what else is happening then? Any other things that you've seen this week that's going on in the markets? How's the SEC these days? They still busy prosecuting people in the US?
Yeah, today
Today?
Yeah, today. So it looks like I think the news was from yesterday, but I was just reading it today. They are after so they asked 3 VCs. That's what's been published yet. But I think if they're going to ask, they're not going to ask only three. Yeah? There are 3 VCs about all the agreements that they had with certain projects to buy tokens. So they are after the VCs now.
Okay.
So, they're trying to cut the head of the snake that way. Because if VCs are start to be afraid, they're not going to put money on projects. They're not going to invest, in crypto, blockchain, whatever company. So yes.
Yeah, I know. I noticed this come through. I noticed it yesterday. It was announced on Friday, I think, about the SEC going after some crypto venture capitalists. And
He's
starting to
gone. He's
investigate.
gone. Now he's definitely gone because people with money, they will go after him. Yeah.
Okay.
They're not gonna stay quiet. They just go. I doubt if he lasts more than a month now. Okay, because
Who's that? Gary Gensler?
yeah, he can go after projects. He can do all this. When he goes after the people with the money, I don't think he's gonna survive long. Be honest.
Okay.
Maybe that's why. Maybe he wants out, and he found this is the way to do it. Without quitting.
Okay.
So. Apparently, that's the preference for many these days, So
Well, I guess in the States as well, the SEC only needs to carry on for a couple more months until they've got the elections coming up for the US presidentials in November. And that could then mark a new sign of a change in attitude and that anyway, I guess.
no, well, only if Trump wins, right? Because otherwise, it's a continuation.
Yep.
It's as simple as that. So,
but even with that, he seems to be saying certain words in order to get votes. Whether he actually puts stuff into action or not.
Yeah, I'm honestly, you know that I'm not a big fan of US politics because it's just madness, what they have there for the last 10, 12 years. So I wouldn't believe any single word coming out of Trump's mouth, either. Okay. So he's not a Bitcoin guy. He took all the Bitcoiners in Nashville for fools, when he went there and did that speech. He just wants their money,
But at least it's something, as I was saying some of the other week, the very fact that you've got presidential candidates appearing at a crypto event and getting the publicity that they appeared at the crypto event, whether they actually agree with crypto or disagree with it, it at least gave some visibility to the market and the whole environment. So that's got to be a good thing. And at least he wasn't saying, "Oh, crypto is just all drug dealers and criminals and the usual stuff."
Well, if you look back in, what he told about crypto a few years back and Bitcoin, then you would understand, that he's basically just went there to get some money for his campaign, nothing else, So nothing guarantees if he wins the election and goes to the White House that he's going to do it. I actually suspect he will probably do the opposite, But who knows? Yesterday I saw the news, or the day before yesterday as well, that his son he announced huge plans to launch a DeFi platform. Huge things are coming to DeFi. His son, Donald Trump Jr.
Okay.
made this big announcement. It was all over the place. So, you know what he has done with the NFTs? Do you remember?
Yeah.
It
Yep.
was,
It was certainly just a whole load of hype, wasn't it?
all the bollocks. It's just to grab money from people. So this is another one they're gonna do, and people are happy to give them the money. So, hey, whatever. It's okay if people want to give the money to that guy or to another candidate or whatever. It's their money. People are free to do that. But uh, uh, people that are in crypto for a long time should really be a bit more smart. It's just money grabbing, nothing else.
Well, it's no different to what we see with some of the NFTs with the likes of Elon Musk, and we see with like Dogecoin and some of the meme coins and that there's just a lot of popular manipulation going on by whether it's celebrity endorsements or politicians or whatever. It's just another form of shaking the market around, trying to make some money out of it, I guess.
Yeah. Talking about money, actually, it was not too bad for crypto and blockchain in general. Last quarter, we attracted about for startups investment. I think it was 2.7, 2.8 billion, if I'm not mistaken. I was reading that as well,
Okay.
early today. So that's super interesting. So despite the markets and a lot of uncertainty and whatever, a decline there was actually quite a big decline in deal volume. But 2.7, I think, was the number. Or 2.8,
Okay.
I can't remember exactly, but that's super, super interesting.
Well, this is the whole thing again. That I'm always bemused by people who are looking at crypto prices as an indicator of adoption, and I think it's more in terms of volumes, more reflect adoption. So that volume in terms of number of wallets being actively used, as opposed to just crypto prices, which I'm never kind of convinced of being a true reflection.
Yeah.
But yeah, it's kind of I guess we're in that kind of like crazy season for crypto at the moment, aren't we? Where it's August, it's summertime in a lot of the western parts, goes a bit quiet. We'll see what happens. But yeah,
Interesting thing was when I was reading that was that in quarter one, which was when Bitcoin and crypto in general was really pumping and going up and recovering from the previous years, that first quarter, had 2.5% less investment than this last second quarter. And that's super interesting, but there was less deals. So what that means is second quarter, more money invested in startups in crypto, yeah, but the number of deals decreased something like 10, 12%, if I'm not mistaken. So what that means, there was higher tickets for investment. So projects looks like investors are putting higher tickets and not kind of just selecting specific projects. So much higher tickets and a small number of projects. While before was like spread across multiple projects, and that's super, super interesting because it means there is going to be quite a big change the rest of the year in terms of how money is allocated by all in all the companies that are investing in our space. Yeah, so it will grow, of course, but I think that's a bit more smart money instead of all the spreading. And I think that's because a lot of these small crypto funds, they went quite early in October, November, and they jump in and they actually put money in Bitcoin. Yeah, waiting. Everybody thought by this time Bitcoin was already 100K. Yeah, and that's how they do it. They get in early, so they buy low. They exit 50% of the portfolio so they can invest, then in other crypto companies. So this has been happening for several cycles, yeah. But this time, I don't think they exited. That's why I'm thinking that that's just me. I'm thinking that there's more smart money that is coming to invest in small number of projects but higher tickets. Yeah.
Okay. Well, so it's right. MB, is that you rejoined through a different link?
Yeah, this is MB. So, can you hear me?
Yeah, we can. Great. Welcome aboard.
It's Manny for short. Yeah, so I gave up on my PC. I'm logged in through my phone.
Excellent. Well,
Um,
we can see you and we can hear you. That's great.
great. Yes, I'm here, based in Birmingham, UK.
Okay.
I'm sure you know it well. Uh, you're in London, are you?
I'm just to the west of London, yeah, but I
Right,
I, I know parts of Birmingham. Uh,
right. Okay, yeah.
cool.
So, in a nutshell, I don't want to interrupt what JT was saying, but I'm basically a programmer. I lost my job about a year back, but I've been most of my time over the last sort of 10 years, I've focused on non-crypto, so just futures trading.
Mhm.
So hopefully, fingers crossed, I'm ready to go live with that soon. So just short-term moves on the futures markets, but I have started looking at crypto. So I'm looking at it from the programming angle. So I've got lots of material which I've started to go through. I started to go through some material on flash loans, but the guy who created it is very, very good. He's got lots of good tutorials on Udemy, on the Udemy website. His name's Sean McDowell, I think it is. But some of his material for flash loans was out of date, so I was trying to replicate his steps, but then I was hitting sort of barriers where, because crypto is moving so quickly, the material that he's put in the tutorials wasn't valid anymore. So I couldn't finish that particular tutorial. But there's other material I'm looking at. So from what I can gather, and this is something, one of my friends is a fund manager, and he suggested the original problem that I'd been looking at in terms of just trying to predict futures markets movements very short term. That was a difficult problem, and that I would have more success with crypto arbitrage. So where you're trying to basically get algorithms to kind of look at fluctuations and look at the price discrepancies between different exchanges, that kind of stuff. So
Mhm.
it's from what I can gather, there is probably some mileage in that approach. However, even the guy who's created some of this material has conceded that he's done a lot of R&D and he's got some good methods that you can look at. But in order to compete, you'd have to scale up and you'd have to have some serious hardware. So you have to have money behind you. So as a one-man band from a bedroom, you probably couldn't compete with the funds who can do that kind of stuff at lightning speed, and they've got all the right servers and everything. So that's really my interest in crypto. So it's something I've sat on for a while. I've had this kind of material knocking around, but today and the last few weeks, I've started to really pick it up again. And sort of my mission is by the end of the year, I want to kind of know what I'm doing when it comes to the sort of technical side of how to trade crypto with algorithms, and there's a whole sort of technology stack around that. So I'm still very interested in this. We may have discussions here that I just caught the end of the thread from JT in terms of the macro, in terms of
Mhm.
what the funds are doing. That's very much I'm still interested in that kind of macro picture, if you like, in terms of what the market sentiment is and what the funds might be doing, or the public might be doing, and any kind of um, regulatory changes that make it easier or harder. So, for example, I mean, one of the tutorials I'm looking at, it's saying that you can't. It's looking at the DYDX exchange,
Mhm.
and it's saying that you can't, from the UK, for example, access that directly. So you have to be a little bit sneaky and use something called a VPN.
Mhm.
So you're basically fooling their computers, the DYDX exchange, to think that you're coming from France or something. So it's a kind of a minefield, and I'm sure that we've probably all seen the kind of stories of hackers getting involved and ripping off some of these exchanges and all that kind of stuff. And obviously, FTX a couple of years ago went under, and there was a whole sort of scandal around that. So from what I can gather, I mean, I'm sure there's a lot of institutional and regulatory chain frameworks that have been put into place, but crypto at the same time is very much the wild, wild west. And
Mhm.
I suppose from my point of view, I'm just sort of hoping that from the sort of trading side that there's still enough of an edge there. But at the same time, you're competing with the funds and the hedge funds who've got a lot of resource behind them and a lot of tech. So that's really, in a nutshell, my interest.
Well, I guess one of the challenges, because I've seen a number of people over the years who've tried to exploit arbitrage opportunities, as you describe. If you see price differences across exchanges, then if you can some way execute a deal to take advantage of that. But one of the problems I've seen that is different with crypto compared to traditional futures markets and that is the very fact that the whole latency side of things in crypto is not necessarily driven by the technology. So you think about, if you're trading with like London Stock Exchange or the Dow or whatever, you're all using like is it MTF1 or whatever it is? It's all high speed, high frequency trading. Everyone's on an equal platform. You might be able to get like a microsecond difference advantage. With crypto, though, the exchanges are on a different level of latency quite often. And this is where you see it. One of the ways that I know that crypto prices are going ballistic, either up or down, is because everyone suddenly starts saying that the exchanges have frozen and that you can't trade. So this is a frustrating thing. So it's interesting. I was just curious. I see Ken's joined us as well. Ken, I don't know if you've been on 20 of our sessions before. If you want to say hi.
Yeah, hi. Yeah, I've been on the sessions before.
Go.
Haven't been I think the last time was before the European Championships. So I've been sort of enjoying the sports ever since.
Okay. Well, I know some people have been drifting off and watching football or cricket or the Olympics or whatever. So good to see you back anyway, Ken. Ken, well, were you the one who's interested in Ethereum developments?
Yeah, that's it.
Yeah. Okay. Yeah. It's just it's always an interesting one when I get just first names. It's like, which Ken is that? And everything. Okay. Yeah. Because were you looking at doing a fork of Ethereum in some way?
Yeah, so
right? Yeah.
Yeah, we're forking Ethereum. We're going to fork the state, but we're working to see if we can basically implement execution sharding on Ethereum, not from a base clean Ethereum, it's like I don't know, some other chains have done. But would it be possible to actually fork the full state and at the same time run execution sharding on all that data? That's what we're working on.
Because that kind of ties back with Manny in a way that then allows you to do high performance transactions if you do doing sharding like that.
Yeah, well, I mean, you can definitely do high performance transactions on like modular blockchains such as what can I say, Solana. But the thing is this is if you want to have a lot more validators, then you need to have your basically equipment really cheap. The problem with Solana is in order to become a validator, you need to have a lot of money. So it's just going to restrict the amount of validators. So it makes it a bit more centralized. And that's the issue that all modular blockchains are having because they're going off the kind of legacy system. So if you think of your laptop and so forth, basically, it effectively works in the same way as modular systems work in that parallelization of data. And that's why you're able to get it quicker and quicker. Whereas sharding is slightly different. It's harder to do, actually. But the main advantage of sharding, it will make the node, anybody basically should be able to run a node. Just like with Bitcoin, you can run a node today. You won't win it's actually about 4 months ago, someone running his own kind of like hobby Bitcoin node did actually win I think it was, he won and he got the reward. I mean, but that's very rare. It's usually the big farmers with all this stuff that win it. But it still allows that, anybody to run a node. And so you can have your own copy of the whole blockchain, the whole Bitcoin blockchain from day one. And you don't have to have £1 million infrastructure. You can just go down to your local shop, spend the equivalent of $200 on some cheap equipment, plug it in, and you get, you can get a full copy. And that's what I think is the advantage of monolithic blockchains where you can have sharding onto it, is it can allow that to happen. And the more validators you have, then the more decentralized it becomes. Whereas that's why people keep going on Twitter and screaming that Solana is centralized and all these other basically modular blockchains are centralized is simply because if you want to become to run a node, basically, you do need to invest a lot of money, which is unfortunately majority of the people in the world don't have. The majority of people in the world could go out and buy, be able to spend $500,000 to run a server farm. That'd be great, but it's just not the case. Whereas with the monolithic ones, it's just really easy to run up a node and just start validating.
Okay, so it's kind of quite interesting because that actually links back in with something I've been thinking about lately, that crypto seems to not be hitting the news too much these days compared to AI. And AI in its various forms, and again, there's a load of hype, tends to be using GPUs for the compute. And so I'm just wondering, is that having an impact on the crypto market? Because it used to be, you'd get yourself an Antminer S6 or whatever. You could go mining some coins, but are the prices of mining rigs becoming more expensive because of the demand on GPUs that the growth in AI is creating at the moment? Don't know if anyone's got any thoughts on that.
The thinking about that is, yes, it did, because even for gamers, all their graphic cards and everything were becoming expensive. But the thinking around it is as more supply comes into the market, because as you can see, the top sort of manufacturers of the cards are worth a lot of money, so it's driving a lot more competition. And as that happens, you get more output coming out. And apparently the cost of actually getting the cards is starting to reduce. So as time goes out, it'll start to reduce. I think Elon Musk as well, he's basically gone out and invested in some other companies who actually, because he needs it for his own equipment. So there's a lot more competition to Nvidia at the moment, because people look at Nvidia's share price and thinking, well, we want a bit of that. Yep. And that's over time that should come down. The only thing though, will it come down enough for the average Joe to be able to run their own kind of AI systems? I don't think so. I think AI is going to be a big business play, government, big businesses, because you're just going to need a lot of money to crunch that data.
Okay.
I mean, AI is a very big area. I mean, when I was referring to the futures trading, which is non-crypto, I'm using some simple, well, I wouldn't say simple AI. It's a Microsoft library that plugs into the code. And that's, fairly lightweight AI, but that's not probably the heavy duty AI that you're referring to, where you require, the serious GPU power. In terms of your comment regarding the mining, I'm not an expert. My understanding is that the kind of mining done by an individual is no longer, from speaking to my brother some time ago, is no longer efficient in terms of generating cash, as far as I'm aware. So because you've got these, huge mining setups in China, for example, where they're running, thousands of GPUs, you cannot compete with that in terms of mining. That's my understanding. I'm not sure. I can't.
Yeah, so he's very correct. He's very correct in that if you are running, let's say, for example, you want to mine Bitcoin, you can mine it, but you will not. I mean, it's very highly unlikely you'll get the reward. So yes, he's right, as in it's not efficient for small individuals. Now, a good example. One of the things though to think of is that something like Ethereum, which has moved from proof of work to proof of stake. So it's not really. It's about how much ETH you've got to stake. Really, it depends on your rewards. But again, there's that centralization. So the more ETH you have, the more rewards you'll get. So there is still that issue about centralization. So I think the kind of Ethereum situation, it brings on a different problem, basically. Proof of stake has got its own problems, and proof of work have also got its own problems. Both have tended to go towards centralization, meaning only, not so long ago, you could actually be mining using a graphic card from your PC, that your gaming graphic card. You'd be able to go out there and mine Ethereum quite well. And I think it kind of topped up probably I'd say towards 2018 when you'd have stories
Mhm.
of people's, cars going on fire in their flats or something like that. But yeah, at the moment, your brother is very right. It is kind of a big money play. So the normal person, you can get a copy of it. So if you wanted to keep your own copy, you can mine and keep your own copy. And a lot of businesses actually do that, not for the reward, but so that they've got a copy, the whole copy of the Bitcoin block or the Ethereum block or stuff like that. A lot of the big trading firms that deal with this also have affiliate companies that they run, who's just their main purpose is to keep a copy. It's because it's a ledger,
Mhm.
and they want a
Yeah.
copy of their own ledger. And then you've got those who are in it to make the money, and they're the big farmers. I mean, I don't think China's number one. I think Texas is kind of taken over to be the number one
Mhm.
sort of Bitcoin farming, and I think it's one of the Scandinavian countries is number two. But we're talking about companies who are basically quoted on a stock exchange. Yeah, that's the amount of money needed to actually make it profitable.
Yeah, sorry.
I was quickly going to add, because JT threw something in the conversation before in the chat, because it was being mentioned about validators and about Solana before. And it's probably worthwhile just mentioning as well, JT happens to share, there was a possible security vulnerability in Solana that was raised its head a couple of days ago. Yeah.
This is super interesting because how do you contact a validator on your supposed decentralized network to reach the 70% update so that the vulnerability you will not be so exposed? It's all bullshit because Solana plus a few partners, they control obviously 70% of the entire network. So Solana is not decentralized whatsoever. It's a database. I keep telling people, it's a database with lots of people that are providing those transactions. And who are those people? Yeah. So, I mean, it comes back to the problem of blockchain, I mean, there's not many networks that are decentralized. Bitcoin still is, yeah. Let's see for how long. But Ethereum is controlled by a few big players, all with ties to China. So Ethereum is controlled by the Chinese mainly. Okay. Solana, obviously, for American entities. Yeah. It's so obvious, there's not much to say about that, And what's the future, really? What is going to be the networks that are going to be totally decentralized?
What about Cardano? Cardano keeps saying they're the most. I don't know a lot about Cardano because I'm not really a follower of it, but they do come out in a lot of research white papers as the most decentralized.
Which one? Sorry,
Cardano.
Ada.
Oh no, no. Okay, I think there's potentially. I can see one that is growing now very fast. You guys need to look. The concept is very different from everything out there. So this was Coin Network, KOII, yeah, Coin Network. So this is a guy that got initially a grant from the same guy that gave a grant to Vitalik to create Ethereum. And Vitalik didn't create what they've agreed. So this guy that gave the money to create for the founder to create Coin Network wanted him to create what was supposed to be Ethereum initially, So this guy has created. So far, I think they have 85,000 people running nodes. Yeah, and maybe more now. 89. It's
89,902. How's that for up to date?
Yeah. So it's this could potentially be very interesting. I know the founder. We're in touch often, but I think they are onto something here, and the anyone can really run a node. Yeah, and what you do is you actually create tasks and you broadcast those tasks to the network. Yeah, so somebody is going, whatever that task is, it doesn't really matter. So the concept is very, very different from what you see in blockchains, create a smart contract and so on. And yes, they have a blockchain. They have, I think, a DAG as well. So I'm keeping an eye on them. I think this could be super, super interesting to build on. Yeah.
Okay.
Are they
Yeah, it looks interesting. Yeah.
So I was just going to
Go for
ask,
it.
are they Turing complete? So you can actually program on them?
Sorry?
Ken, I was trying to understand. I know I'm not an expert on sharding, etc. So, what is your end game in terms of you said you're forking. It's essentially a fork of Ethereum.
Yeah.
What is the objective in terms of is that your revenue stream? Is sharding?
Well, no, it's just a different way of consensus. So you've got people who've done it like near, they do sharding and it works pretty well. But what they did is they started from scratch. What we're doing is we're going to try, because the difficulty is to actually shard a complete state. Complete state basically means a massive database, so that all the transactions and all the projects built on Ethereum, and that's why Ethereum is very kind of like hesitant to go onto execution sharding. They're trying to move it aside because there's so much value on it. So by forking it and then working on it while we're in a test bed, we can actually try and implement sharding and launch with all those projects, but execution is done on sharding, and therefore the project should be very fast and also very cheap. So those are the two main things. Well, you've got security, which is fair, but you also need speed and the cost that people really look for when they're looking to use a blockchain.
I like a near a shard, a nightshade. Yeah, I remember Ilya telling me all about it in early 2022. We were having a beer, the near founder, and I was really impressed because with the near sharding, the way they have done it, it looks like it, and all the simulations are pointed at, is it can continue. And you correct me if you've done anything with it, Can you probably have more. I'm talking only not from a practical point of view, from everything that I've done and I looked at, and in terms of doing some projections, it looks like it can continuously to the more nodes you add to the network, it doesn't slow down the network like on many others. It basically continues to increase its speed. That's my view at the moment of Nightshade on here. But I don't have the real practical experience to look at the sharding and how it behaves as you are throwing a lot of volume at it. Yeah.
Yeah, I like their technology. It's very good. Their main basically issue at the moment to test it out fully is to get users, and that's one of the biggest problem a lot of blockchains have. You can look at them and you think they're really good, but if you don't get the traction of users, then you can't really test it. Where someone like Solana, they were able to get a lot of users because they were telling us that they couldn't go down, they were decentralized. And as you rightfully pointed out, the first time they went down, they put out a tweet saying we'll be up in 2 hours. And everybody was like, wait a minute. How can you have like a customer support tweet saying you'll be up in 2 hours if you're decentralized? And that's when people started looking into them and then realized, oh, wait a minute, yeah, they're not decentralized. And so with Near, everything looks brilliant until a lot of users go in there and then it's tested. That's when we can see where the faults are.
Yeah, applies to most blockchains, like you said, well, to all blockchains. I don't, that's why I was saying there is no blockchain that is really decentralized apart from Bitcoin still, I'm actually quite hopeful with the coin network, I'm really, really hopeful. I hope it continues to grow in the world.
Just picking up on the conversation in terms of what Ken was saying and these comments about Solana, just taking a sort of bird's eye view for a second. Apologies if I'm not as clued up as some of you may be, but as far as I'm aware, Ethereum, because in terms of what Ken I think was saying about Turing complete, you can develop applications, and so that's one big area right, in terms of application development on these kind of frameworks in terms of Ethereum, decentralized apps, etc. So is that what, Ken, you're getting at in terms of that? You're sharding, the aim of that is to develop your applications on that separate fork. Is that what you're getting at?
Yeah, I mean, our main thing is to do, because you have the trilemma problem with all blockchains. So you've got security, which is one that no one really wants to basically leave out, because security is really important. You've got scalability, and that's where we're looking at in terms of sharding. So it's keeping that monolithic blockchain, where someone like Solana, they're looking at the scaling issue as basically it's called parallelization. That's how they do their blockchain. But like it's been mentioned, it really does lead to a lot of centralization. So that's really the main issue we're looking is what's the scalability on this. So you've got decentralization, which obviously if you get the scalability and security right, hopefully you should get the decentralization right. So those are the three main areas that everybody's struggling with. But security, you can't basically, that's kind of like number one. You've got to try and resolve that, otherwise you can't resolve the other two. So people do, I think security has possibly been done. So the main battle we have in the industry is the other two, decentralization and scalability. And so depending on which way you go, depends on which one you sacrifice. So Solana, they've sacrificed decentralization to go for scalability, because they just want to attract people who want to trade. That's what the founder says. They want to be the number one trading platform in the world, basically.
Is your application focused on trading, or is it just application development for a particular platform that you effectively then sell that software? Is that what you're trying to do?
No, for us, we're going to try and focus on scalability, because I mean, there's another thought in the industry, which is once you get true scalable blockchains, then better products will be built on it. Now, once you get better products built on it, decentralization should follow. And that's why we're focusing on scalability, which we think will happen with basically sharding. And as basically Ethereum has proved, even when it's really difficult to build, people will build. So if you make it easier for people to build, then they'll build better products. And the other thing is it's EVM compatible. So you don't have to actually learn any new programs as you would if you're going to build on Solana. And also Solana is not...
Solana is a Rust, isn't it? Is that correct?
Yeah, but it's not open source. I mean, you don't even know what's under the source with Solana. That's another issue there. You know, you can't see the code. So it's that thing about open source. I think it was the founder of Linux who basically say that, you know, if you have open source, you'll have less bugs because you've got more eyes on the code. And so it's just coming things from certain principles, and every project takes their own principles and tries to apply them. I mean, Kujira, they're coming through open source, but they've got their own kind of thing. They also want to be a trading kind of blockchain, and they're optimizing for trading. So yeah, every blockchain is kind of optimizing for its own way, whereas we're trying to optimize for scaling.
I guess the other thing on open source and the security aspect of it, I think it was Andreas Antonopoulos who came up with the idea that it's through having visibility across the community that you actually increase the resilience, robustness. He described it, I seem to remember, as the difference between having a child in a bubble where they're totally isolated from any infections, viruses, and that kind of thing, compared to a pigeon in Trafalgar Square, which is exposed to absolutely every disease, illness, and whatever. That actually, it's the pigeon that is more survivable because it develops immunity. And his analogy was in open source, because your code is exposed to absolutely everything, and the community has to make it more resilient, more robust. That's what actually improves the security model of it. I thought it was an interesting way of thinking about it.
Yeah, it's very, I mean, Yeah, he's a smart guy. But I mean, I read one of his books, and he's not really a fan of other blockchains, but Bitcoin. I haven't heard him speak for a while, but he's very into Bitcoin, and he's not really a fan of moving off anything else but Bitcoin, it seems.
Yep. Yep.
I mean, about 3 years ago, I actually went to a cryptocurrency event in London, and there's a guy called Craig Wright, I think his name is, is an Australian professor, and he claimed to be Satoshi Nakatomi. But I think in court it's been proven that he isn't.
Yeah,
He was pushing a Bitcoin fork. I think it was, I can't remember now what it was called, Bitcoin SF or something like that.
Yes,
But
Bitcoin, it's BSV, Bitcoin
Yeah.
Satoshi Vision.
Yeah.
Yep. Yeah, and they still do that. I think it's through N-Chain, if I remember correctly. They still have an annual Bitcoin conference. That you think, oh, a Bitcoin conference, that's really interesting. But it's not actually Bitcoin as in BTC. It's Bitcoin as in BSV, which is the Bitcoin Satoshi Vision. Yeah. Yeah, Craig Wright, an interesting character. I may well have been at the same conference.
What's interesting about
he's
Craig though is he's the only person in the world who's been proven not to be Satoshi. So any of us could say we're Satoshi, but he's been not only proven but barred by the court. But the court has told him he's not allowed to call himself Satoshi.
yeah, so that narrows it down to what, 8 billion people.
Yeah.
Not being Satoshi doesn't mean that he doesn't have the wallets.
Yeah. Well,
Yep.
remember that the court case he had in the US with the family of he was suing the estate of
Exactly. It was David Kleiman, which
and he asked him for a wallet, you know, or to transfer or prove ownership or something, and we're still waiting till today, apparently.
allegedly Kleiman is Satoshi, so that's why they were after the wallets.
It's an interesting world, isn't it? And again, this is where it comes back to, as I was saying to Manny earlier on, that if your background is in things like high frequency trading of traditional, things like stock, shares, futures, commodities, and that kind of thing, crypto just operates a little bit differently. It appears to be the same, but then you suddenly discover that there are quirks about it in how things are programmed. You mentioned flash loans earlier on.
Yeah.
Fascinating idea that you can initiate a loan, execute a transaction, and as long as you can complete that transaction and return the loan within one batch of an activity, then you get yourself this very, very short-term loan that can be used. But the majority of cases where I've seen that being used to any great effect has usually been nefarious activities in first.
People have used it for hacking. Yeah,
exactly. Yeah. And again, it makes it fascinating though. The very concept of a flash loan, I've been able to have within one overall transaction, effectively a borrow, a buy, a sell, and a repay, all within one transaction cycle. Is fascinating stuff.
Flash loans, when it first started, you did have a few people who were able to make some money off it, but the decentralized exchanges sort of, I think they were able to code some mechanism. But the big trades of flash loans is somebody who looks at the code, looks and finds there's a bug somewhere. There's a bug
and then exploits it.
And then exploits it using a flash loan. That's usually what happens.
Exactly. So it's as they say, caveat emptor, buyer, let the buyer beware, and everything with this whole market still. So for those who are a little bit newer to the space, it is always a tread with care, because it is at risk of being manipulated and that kind of thing, which is, I guess, in some ways no different to other markets which are regulated. Even though different countries have got different regulators, that doesn't mean that manipulation and trading activity with people's vested interest doesn't happen, it does. But crypto's kind of no different. So,
but you do also bump into people if you go conferences who say they're actually traders and actually do make money off trading. So I mean, it's something that can be done within cryptosphere. You do find people who are, I mean, I'm not talking about influencers or people with, you know, YouTube or big accounts who kind of, you know, not those. I'm talking about just like random, you know, normal people from the street.
There definitely is. It's no different to traditional trading in that there are people who either they'll do things like day trading or scalp trading or momentum trading, or they'll use technical analysis in some way or whatever. There are definitely people there who do make money. No criticism there. It's just, I think crypto's no different to traditional markets where over 80% of people who trade don't make money. But that same 80% think they're about to be part of the 20% who does. And it's often not the case. So, folks, really interesting conversation there. I'm afraid we're kind of rolling to on the hour, so I'm going to have to close the call off for today. Hope for those who came along who've not been before, it was worth listening or watching. Thanks everyone for making the contributions. Really interesting stuff as always. And have a great day, everybody. Be safe out there.
Take care. Bye.
All right. Thank you very much.